Yay. So I repeat, we are going to look onto lot sizing or lot size. So a lot size refers to the unit of measurement for trading volume. It represents the number of units of the base currency bought or sold. We are here. I said we are going to look at types. Types. Before I go further, still I said, for example, if you see that we have kilos of rice, but we are just going to pick one cup, okay, which a measurement, just a measurement as in one cup, it's what we are going to prepare, so it is what we are going to use that day, okay. So in the in when we come back in the market, it is we know very well that it is we have very many, okay, it is huge, but depending on our currency, so let our or depending on our account, okay, depending on our account, we are going to use this. So for example, you have 10 kilograms of rice, okay, but so that 10 kilogram of rice, let us mean it is the volume, the heaviness of a current spare, okay. Hmm? The heaviness of, I'm just giving a narrative for you to understand, for you to understand. So the whole kilo, 10 kilos, is the volume, is the heaviness of the current spare. Then then if you pick if you pick a, so I was giving in an explanation, like if you the 10 kilograms refers to the volume or the heaviness of a current spare, okay. Then the measurement, okay, it's what you can finish, okay. The article unit, it's what you can finish depending on your account size. So the account size, it is you omuntu agenda okulya yemme, the person who is going to eat food, you can't finish all the 10 kilograms, but you're going to pick a cup depending on what you can eat. So you personally, let me take it, gwomuntu, you are the money that is there, you have deposited. Then the 10 kilograms is the heaviness of the current spare. Then the chikopo kimu kyoba osenyeeko, that's the unit measurement. Oba okategedde? So you are going to use that, you're going to ogenda senako ekikopo kimu ekyo kyogenda ofumba, so that okole ki, so kyoba ogenda ofumba gwolye. So what do I mean here? It is used in risk management, that since eri volume nene ate appetite yo ntono, ogenda kujjako ekyo ekikopo kimu kyoba onaalya kikusatisfying, kubanga bw'ofumba gwonna bijja kwonooneka. So what do I mean here? That the higher the lot size, okay, the smaller the account, the more you put in risk of losing. Bokategedde? Eh? Mm. You will, I'm just bringing in that way. It's not literally that every time you have a small account that you put in a big lot, you are going to make a loss. No. But it is a tool that is used in risk management. Okay? So that you don't risk too much that your account may blow. So for us, we call it blow, boom, because when it blows, it is it is dismantled. So oberanga losing the account. So it is part of risk management, of which we shall use as an importance. We shall look into that. So we are going to look at types of lots, size. Okay. So here down um, we do have what we call a standard lot. We do have what we call a standard lot. We do have what we call a mini lot. mini load. We do also have what we call a micro load, and we have also what we call a nano load. Nano load. Okay. So in a standard load, for example, let me put these lines first. Let me just copy and paste. Okay. So a standard load, these are loads above one load. For example, woyingiramu only one. Wait, this is a standard load. And how many units does it carry? It carries 1,000 units. Carries 1,000. Oh, sorry, not 1,000, 100,000. So these are 100,000 units. Okay, this is a standard load. So if you go above here, of course, if you go above here, if it is 15, of course, it will be 150. Is it? You just get this 100. It will be, if you go above this, you just get this 0, you add up. So 15 times 100, that's 15,000, right? No, 150,000. 150,000 units. Okay, so anything above one load, it's a standard load. Anything above this, then a mini load, it starts from 0. Let me use this. A standard load, a mini load, sorry, it starts from 0.1. Okay, anything that starts from 0.1, it is a mini load. And mini loads, its units, it's at 10,000 units. Okay, we are going to look at it, but in future there you will understand deeper. Then a micro load, anything that starts at 0.01, its units, it is at 1,000 units. You're understanding, eh? Then a nano load, it starts at 0.001, and its units, it is at 100 units. 100 units. So these are the measurements of a trading volume. Okay, so if in case the trading volume is very heavy, it is very heavy for you, just want to pick at least 100,000 units that you're going to use. Okay, so let's get importances here for you to understand deeper. Number one, importance. You can write down importance. Let me write it here. Importance. Importance of lot size. Of lot sizes. Okay, so number one, it's a risk management. Risk management. Risk management. Here, controls exposure. You control exposure. Exposure controls exposure to the market. Okay. nti towaddeyo everything. You're not risking the whole account. You're picking a portion of your account. Okay, nti otaddeyo $20, but on a certain asset you're willing to risk. For you have put $100, but on an asset you're willing maybe to lose $20. Okay, so it is the lot size that will help you to calculate which lot size you're going to lose that will fall under the $20 risk. Okay, okategedde ako eh? Okay, so let's look at it. It is what you're on you're picking a portion of your for example kwagala you risk $20. Okay. So how would you risk it? It is through lot sizing. Eh? You're going to calculate, you be like, when I want to lose $20 out of my $100 account capital, I'm going to use either a mini lot or a standard lot, because most of the brokers stop at micro lot. The one of nano lot is at it's derivative, and those are when you're trading VIXs. But we shall learn in the future there how to do what, how to deal with the VIXs. Those are the volatility indexes, but we shall learn them later. Okay, eyo nga tutuse mu professional area. That's when we shall learn about them kubanga for them you just need to get the skill, get the broker, you can trade. That's all. You don't need much. So risk management, it helps you to control until, or if you want to lose $20, okay, of $100 capital, you're going to go on your MetaTrader, you calculate that, you'll be like, okay, this is where I want my loss to be at, okay, of the $20 account. So which lot size am I going to put? So you start going on that lot sizing bar where it is. You input, let me say you want to lose at $20. You first input a lot that you wish that you would want to enter. Okay, then when you see it is the loss is too much, okay, you reduce the lot like that till the lot falls under your risk, what you want to risk. Okay, till it falls under what you want to risk. Do you understand that? Okay. Then number two, we do have what we call position sizing. It doesn't differ with the other one. It doesn't differ from the risk management.
Bluetooth mode. Bluetooth connecting. Please wait.
It doesn't differ with the risk management. These ones are all under the other one. So with the position sizing, determine the size. So when you determine this one, determines trade size. Okay, so what do I mean by size? Determines the trade size. So for example, somebody who has entered a standard lot, okay, the size differs from the person who has entered a 0.1 or a 0.1 or a 0.3 or a 0.2. It differs. So determines trade size. Obuzito bwaki obuzito bw'ositudde, obuzito bwa lot eyo bw'esitudde. Okay, you will understand it a little bit mu maaso awo when you start inputting in these things. So we do have also what we call margin requirement. This one affects available margin. So there you may be like, what is margin? Of course, every word I may speak, its answer might be in another topic or in another example. The answer for you to get it. So they move hand in hand. So you can't talk about God minus talking about Jesus. Yeah, they move hand in hand. So another thing is, um, we are going to learn about margin in a few. What is margin? Okay, what is margin? We are going to learn in a few. Then you come back to this example for you to get a definition of required margin. Okay, so we also have profit or loss. Profit, profit or loss, profit or loss calculation. This one I don't need to explain, but of course I already explained it. Impact trade outcomes.
The other one is like, I think it's similar. The stop and loss.
Yeah, and also it determines the outcomes, whether it is in profits or in a loss. But for the loss, it is you who calculates it, and also the profit. So for example, if you want to lose $20 account, maybe if the price goes your way, you may find, depending on the movement it has moved, you find that also you have what it has impacted the outcome, the profits you get. So for example, the person who has entered a standard lot, the loss and profit outcomes differs from the person who has entered a mini lot. Okay, however, they enter on the same area. Niwe bayingirira wamu, the outcomes differs. Why? Because they have entered different lots. Yeah. So let's also learn about the margin before I explain the other one up. What is margin? Okay, it's there. Margin. Let's look at the margin. What's the margin? Oh, margin. Okay, margin refers to the amount to the amount of money required to open and maintain uh, a trade a trade a trade a trade okay, a trade position. Let me say position. A trade position. And also it's a deposit held. It's a deposit held by the broker as a collateral, collateral uh, for for potential losses. Do you know, like the way I said, that this market is very huge, okay? But because of the systems they created, it it came that it came to us that everyone can access it, and everyone can do what, to trade, okay? So for the broker, they just give you, okay, the amount you have to deposit. but most of the money that we deposit, okay, it is like a collateral, okay, kiringa ono oba waddeyo omusingo for them to give you possibility to enter a position and maintain it, okay, in the market, because we personnel, we the retail traders, we don't have enough money to move the market, so they lend us on their what, on their money through margins, okay, through margins. They hold it as a collateral. So if you make a profit, they will chop those the money will remain there if you deposited $10, but as I said, they will cut in just commissions or some commission from the spreads that you're seeing. But here they give you a possibility to trade. So if you deposit, let me just check a minute here. So if you deposit why isn't it logging in? So if you deposit $10, okay, let me first enter each trade here real quick. Okay, so if you enter a trade, um, they give you a possibility. They give you a possibility, or that what, or that collateral. So woyingira ki trade n'ogenda wali awabeera trades, ojalaba ekigambo nga bimuvinga, then wali eri waggulu ojalabawo balance, equity, margin, okay, then free margin, okay, then margin level, okay. So the margin level percent, whenever it reduces, this is where they will send you notification. Then free margin, it's the money that you have on the free margin, it's the collateral they will leave into you. Oh, so in simple terms, from margin up to margin level percentage, it's like they are showing you the collateral that you have and the percentage you have, the free margin in money, which is $10, and the margin, the current margin that is running, okay. Yes, that's what they show you. You will find there a word balance equity. For the balance and equity, we looked at it yesterday. Then you will find there a word margin, free margin, and margin level percentage. So the percentage of the margin, it is what is maintaining the trade. Then you'll find there free margin. The free margin is the money, that collateral money that is maintaining the position. Then margin, it is the money, okay, it is the money that is maintaining that very position, okay, that very position that you have entered. Then the free margin is the money you placed as a collateral for any position that you put in future. So in most cases, if you will find that if you are in a loss and the loss is increasing, okay, the other side it is decreasing, the free margin decreases, the margin level also does what, decreases, then the margin increases, okay. So you don't have to get confused into that. So this is like they are going to borrow you money to run the system because you have placed in a collateral. So with the collateral you have here, okay, with the collateral that you have, you're going to use the lot size to input, so that it with this collateral it maintains the position that you're going to enter, okay. So when you enter a lot, it affects the what, it affects the margin. Oba okategedde ojja bitegeera. So it is like it is Did you enter any you enter any position on a currency pair? You just buy or sell, then you will see it there.
I've pressed both. I've pressed buy.
Let me bring it here. I explain very well. Let me bring it here. Let me copy it here because this is a lecture account. So I'm going to bring it here. I'm gonna copy it here so that you can understand it well. So here it is. Where is it? Okay, here it is. It has come. So this is what I'm talking about. You see this, okay? Yesterday we looked at the balance and the equity. So equity increases whenever you're in profits, okay? So equity, they total sum up the money that you have that is on the account plus the money that is running in profits. That's what makes equity. Then balance is the money that you have, the real money which is running the position. So when I reach on the margin, it's the money that is running the current position, okay? That is maintaining the current position. Then free margin is the money that is there available, okay, to that free margin is the money that is available for future trades that is held with the broker as a collateral, okay. If in case you enter another position, you will see this one cut. So but if when you go in profits, also this one will increase. Why? Because the margin is increasing, so hence this one will also what? Increase. Then margin level percent, whenever the loss increases, also this one does what? Decreases, okay. Whenever you make more profits, the margin level increases. Why? Because these ones are now the one that are maintaining this position to run. So if this one goes at 000, that means your account has blown, will blow. Sende ojja kuba tokyalina. This one will go at zero, this one will come at all at zero. That means it has the money that was running this position has been you placed as a collateral has been used to run this position. However, the day went bad on your side that you lost, okay.
So that free margin, is it like maybe the extra? I don't think it makes it because you said it's
I said, okay, I said don't confuse things. At the moment I haven't talked about leverage. I told you that you shall learn about leverage. I haven't talked yet about leverage, okay. Don't confuse things. I said free margin is the money that is seated on an account as a collateral that will run your future positions that you'll enter, okay. Then then this margin is the money that is running your current position that has been chopped off from the margin, from the money here that has been chopped off here to run the current position. So if the more you enter positions, you will see this one. The more you enter position, you will see this one increasing, okay. Then the margin level percentage is the percentage that is running the what? The running the what? This position. Okay, since it is a nano lot, of course they calculated it under sorry, since it is a mini load, they calculated it as under a mini what? A mini load. Okay, for leverage, okay, let me just give a glimpse on it, but it is not a session because it is also another session about leverage. Leverage is the power, okay, given given to a trader towards an asset, okay, which which deals with either trading the A book or B book, of which we haven't reached there, so I don't want to go there. It is another session of its own. Then margin, it is your money deposited as a collateral. margin, it's your money. Ogenza okwewola n'osingayo ennyumba, okitegeera? So oba okitegedde? Okay, so I think that's margin. So in simple terms here, margin also refers to the money, sorry, to the money, to the amount, sorry, to the amount of money, to the amount. Haven't I talked already about it? Yes, I have. Why am I repeating this? I have to go to types of margins. Types of margins. You are going to understand a little bit deeper about those margins. So we do have anyway, I was explaining something, but I didn't know that it is already it's already here. So we do have what we call initial margin. We do also have what we call maintenance margin. We do also have what we call used margin. We do also have what we call free margin. We also have what we call margin call. Okay. Then we do also have what we call stop out. Now you are in your mind, you're like katinga zineno sizirabaawo. See? So initial margin is so initial margin is the amount required to open what? It's an amount required to open a trade. Okay, it's an amount required to open a trade. So that means you can align this. If you align well the lot size with the margin, it will tell you that the amount is low. Be moving together. So for example, if you want to use 100 lot, okay, that is the standard lot I'm talking about. Ng'olinako $10 account, it won't go. Ejja kugamba low balance or no money. But it is there. So that means the initial margin to open up 100 lot size, okay, it is low. It is impossible for you to open. Okay. Kati, what will give you power to open 100 lot on a $10 account? It is leverage. Oba okategedde? It is leverage. Kati leverage tujja kisomako olulala. Actually it's not even now. After some, actually it is like the next session. It's the next gund. It is part of the next lesson, but we shall also look at it in future there. Okay. So initial margin it's an amount required to open a trade. So for example, olina emitwalo, olinako emitwalo 10 ejja Uganda, naye oyagala kuyingira lot 10, wosanga nti lot 10 bagiganye, ekigenda okusobozesa okuyingira that trade with lot 10 it is leverage, kubanga leverage ekuwa amaanyi nti ezo sente z'olinako bw'oyingira lot 10 zenkanankana n'omuntu alinako miliyoni 10. Okitegedde? So we shall keep on looking into that. Then this is the so for example, you can't be with $1 you enter you okay, $1 sometimes it enters a trade, so $1 can't enter standard lot. Why? Because it is low margin. But when you have, let me say, $50, you can input because it is also part of the margin that is needed. But however, you have such a small amount, you can just increase the leverage so that it gives you power to be in position to trade. That's why we looked at, I told you way back when we were registering that that let's first leave the word leverage. You remember, eh?
Yeah.
Yes, I told you let's first leave it because it is a lesson of its own. So
My question is,
mm,
how can you tell that this money that I'm going to deposit, like I said, $1,
mm.
it can't crack the standard notes?
So how to know it? Number one, wofuka professional mu this industry. Number one, there is what we call risk management. Okay, okay. Being realistic, you are you have to be you have to calculate your risks. Okay, so I beg you repeat the question.
How do you know that $1
Mm.
can't work for a standard notes?
Number one, okay, the margin. It will tell you ojja yingira one lot bakusindikira notification that low balance. So when they send you low balance, that means they want you to deposit a collateral. Okay, they want you to deposit a collateral nti obeewoleko sente, obeewoleko amaanyi go ge banaleetera mu margin as a broker okusobozesa okuwa sente zobeewozeeko. So kati ezo sente zobeewozeeko wozifiirwa bo batwalamu the deposit you made. Okay, but weziba nga ntono and you enter standard lot, it will tell you that low money or not enough money. So not enough money, it means this: you don't have enough collateral. Mm, mm, mm. Uh-huh. Uh, Gili- yes, that's correct. That's right. So you have to put there a collateral bigger or equivalent. Yes, such age. And now here it's where you are going to input in risk management, understanding what you're going to do, understanding what you're going to risk. Okitegeera. So kyova olaba n'agamba nti ojja tomera jangu nkuyigire. So, and most of mentors don't teach these things. Gye bakusookeza of things that won't help you. They will take you to a book called Baby Pips. You learn things, and you come from there minus knowing these things. And these things are the major things that somebody needs to know. Kitegedde? So maintenance margin. I told, but auntie, those are whatever friends. But me, I also have. Okay, not all. I got it. Okay, nga ye agiteeka ku demo account ekola $2 million eza naye oluteeka ku live Yeah. Bakuba sente zo naye n'okijjamu enjawulo. So those people showed them accounts, my sister. They have a way of scamming. Bagenda they get woba batunulidde ebiseera ebisinga they have a connection to a brokerage company. Nti that brokerage company can give them a tag that shows people that it is a live account, kumbe it is a demo. So for them, they first put on a robot never come never. So the day it makes profits, it's what they bring in people that we have made it. But in real life, things are worse. So for you who is dunderheaded, you don't know about the industry, you jump into the scam. Nga bakuluma sente zo, in most cases, even those people who are selling those robots, you can see they have a huge following. So imagine somebody is coming, you have like 100 people, they are willing to pay $100 for that. How much is that? There's a million asatu aga Uganda. Kati imagine million asatu oli muvubuka tolina mukyala tolina mwana tolina ki just obeera mu room yo. Tell me those 30 million oba tezigenda kyusa your lifestyle erabike ng'omuntu serious alikola sente mu robot. Okitegedde. So we just know the truth but we just keep quiet and because it is like kiringa ogamba nti I'm going to fight corruption. There is no way you can finish corruption. Kitegeera.
It is true. This thing they can't be an
Yeah, oyinza ne bakuku ne ba ne baku ne baku ne bakulemaza eyo like you become lame and for a long time to pull out yourself from that thing. If you're not strong enough, you will you just quit. Mhm. And another, but of course, I'll give you also psychology part, okay? Because I just also want to remove that too much hoping, okay? Kubanga nayo kisobola okuleetera obuzibu okitegedde. Too much hoping, too much hoping. It is reality that you make it, okay? That's the green flag I will give you. It is reality you will make it, but too much hoping can make you think you are the owner of the system. Kati lwe bakukubye ne bakukuba ogusooka ogwokubiri ogwokusatu ogwokuna, you feel irritated n'owulira ng'oli very badly off, you want to quit, you start abusing, do this and that. So okitegedde. So I will have to shape you into the caliber I want, okay, into a caliber of a student I want, okay, through getting you to the each and end to getting you to the level I want. Kubanga for me I shaped myself, but I tell you my sister, there is a whole year that I failed nempawira ddala. For example, oligenda bulungi n'ogenda mu wrong turn oba olaba eyo firimu then neweeyongereyo ddala eri munda we balirira ddala abantu kitegeera. So that's the journey that most of people we fall into. If in most cases you don't have finance, that you want the thing but you want to learn it on your own, so you find yourself by messing around and time keeps on moving. Yeah? But those who are resilient are the one who win. Those who hope and they are resilient on doing the rightful thing by seeking the skill, maintaining their psychology, learning themselves. Okay, those are the people who win. Those who don't quit. So the moment you feel like you want to quit and you don't quit, you have already won. Okay. When you are going to understand more of these things with me, no worries. Just as I told you, mwaka twakatandika, we haven't even finished a month, but I told you in 2 years' time. So just you have to think as a person of a longer term result, not a short term result. Okay. Take it there. So that's why I told you that in these days, it's bw'oba tolina mulimu funa omulimu, bw'ofuna obudde tujje tusome. Sessions will be recorded, bw'otategedde ng'oddayo okola ki obuyitamu neera, so that you keep understanding. Kubanga okubeera omusawo, okubanga hoping to be a doctor you attain that S6 or S6 paper, you go into university, no summer for years to learn something, looking forward for a longer term target. So that's the picture I want you to be in. Okay, got it?
Yeah.
All right. So let's look at maintenance margin. Uh, so minimum margin, it's minimum amount, just minimum amount to keep the position or trade open. And use position open because we usually use position. So ojasanga in future there nga ndi kugamba ntaddemu position ya lot 20 lot 10 lot 1. Okay, so that that's a professional saying it, eh? We don't I like it when we're growing. I like it when I say I entered a position than I entered a trade okitegeera. So sometimes we just hide out our ways. So kati omuntu ategeera position, yeah, but position is much better, but I don't hinder you from saying a trade. Okay, so minimum amount, like the way I said, uh, it does minimum amount doesn't differ from this, this. So the minimum amount that is keeping this position open is 0.57, this. Okay, it is this, so it doesn't just differ. I'm just teaching. We haven't actually gone to the main thing. I'm teaching the foundation. Eh? We haven't reached there. I'm just teaching you the foundation, you to understand most things actually from the application that you are going to see on a daily basis. Okay, we haven't started the main thing, because when we reach also on the other side, we have theories, we have practicals. Okay, yes, and it's a long journey, yes, but as long as you have somebody who is guiding you up, it becomes easy. For example, a doctor who is teaching himself to be a doctor can take over 15 years, unlike the person who is being mentored. You accept it. You can become a doctor by teaching yourself, but you may take 15 years. Okay, you may not know even what you're reading. Or in the terms of not knowing what you're reading, you're going to do research, you're going to do this, you do wrong stuff, you go back, you like oyambuka bwogwa, you climb, you fall, you climb, you fall. In that state, time moves. That's when by the time you know one truth, or one reality, another one comes in. So you have to climb also another ladder like that. So you end up finishing 15 years studying by yourself. So that it is better, it is you have two options. Study for you want to be a doctor, study or teach yourself to be a doctor for 15 years, or pay pay 10 million to be a doctor in 5 years. Hmm? Yeah. Then if it is 5 years, the other 10 years will bring back your 10 million and will do other stuff. So that is it. This, this is the hardest course for ladies, I swear. Just the, this is the hardest. Because number one, olaba, ebiseera ebisinga chemistry, physics, you're dealing with the things, with the tangible things that are there, that you're seeing, using okozesa omuntu, even if newekigenda mu bukyamu, it won't affect your inner person. But this is where you're going to get heartbreaks. You will get a heartbreak. it will play with your psychology. Ejja kukulalula being kuba I don't want to promise someone something nti ojja beera fine. No, you reach a state nga ebintu bikutabuseeko, they are out of hands, but you have to be resilient. Okay, ogambe I know it will work out, kange ndi neebaka enkomewo enkya ng'owulira mm, mm, mm. Kati wofuna yeah, uh, yes, now there is what we call revenge trading. Otaddemu position, otaddeko stop loss. Okay, bagenze ne bakona stop loss ate ne bakoma mu your area of entry n'oddamu n'oyingira. So that means you're away from what you're supposed to do. Now you're using your emotions. Okay, you ojja bilaba, you will see. I'm not scaring you, but I'm showing you the way we are going to into where you where you have to deal with your emotions, where you have to deal with your emotions. You have to studying yourself. It is not only learning these things that I'm showing you, but there is a moment you have to learn yourself. Okay, follow your rules, and another thing, follow your system. Another thing is what should I say, you reach a moment, you be like a soldier obeera otuuke mu kiseera nti even if something happens, you don't feel anything. Eh? You don't feel anything. Mm. Mm. Stressing. Mm. Ono ye jjajja waazo. Ono ye jjajja w'emitima ono. Ayaya gwe. Hey, just that my woman is around, but I would have told you the story. Ah, the person who made. The time, yeah. But of course, we are going to be together on this journey. But I was just painting to you a picture of what things I went through. So I will try my level best to let you know what you should not do, what you should do. First, write down, then I explain. Available, equity. You can also be writing this, then okay. So we were on a maintenance margin, minimum amount to keep the position open. Then portion, used margin, portion of equity used to open, portion of equity used to open a trade, or to use it to open a position. It is like it is a minimum amount to keep. Okay, portion of equity used to open. It is like the same. It is like the same as this. So some that you're seeing there, they are like the same. The free margin, available equity for new trades. Like the way I said here, free margin. Kitegeera the in the free margin in future. So when number in future sincha CD, but the next trades that you're going to open in the next hour, in the next minute after this one, okay? Kyemba ntegeeza that also the next minute, the minute next, okay, is also a future. Kitegeera, it's also future. The time unseen yet is also future, okay? So we are already in the future, okay? We were already in the future. So margin call, no margin call, it's the broker himself, the brokerage itself sends you a message showing you that your account balance has gone below. You need to do what? To deposit for your trades to keep running. Then stop out. If you don't do so, then when the money deteriorates, okay, they they deteriorates and you don't deposit again to keep the position running. For them, they do a stop out, which is they automatically close your position. Hopefully you've understood that, these ones. Okay. Let me see here. Okay, let me see here something. Why is it like this? Ah, but isn't this one now enough? At least you practice something. Then tomorrow we look at leverage. Okay. So I think we recap also tomorrow.